Go to mypatriotsupply.com and take advantage of this $250 discount to secure your family's future now. If you order by 3 p.m., your order will ship within the same day, so you'll be prepared in no time. That's mypatriotsupply.com. mypatriotsupply.com.
Seems everything costs more these days. Gas, groceries, and when's the last time you checked your wireless bill? Yikes. When it comes to big wireless, if you're staying, you may be overpaying. Here's how to get the same fast, reliable nationwide coverage without the big wireless bill. Switch to Consumer Cellular. Plans start at just $20 a month, and that's not a short-term promo. Our U.S.-based experts will get you switched and saving in about 20 minutes. Call 1-888-FREEDOM or visit consumercellular.com and start saving today. Plans include $5 credit for auto pay and e-billing.
This is the Money Matters Radio Network. WBNW 1120 AM and W275CM FM. Concord, Boston. The Money Matters Radio Network.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We pride ourselves on being able to support veterans in their time of greatest need, ensuring they receive the protections they deserve. For over 100 years, the DAV of Massachusetts has helped thousands of veterans with housing, transportation, and medical assistance, and you can help too. Please visit dav5k.boston and make a donation today. That's dav5k.boston.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled Understanding Medicare, Essential Questions Answered. Mike, first one that most people have, how do you actually become eligible for Medicare?
Vast majority of us, you turn 65, and there's a special window that becomes open to you when you are turning 65 for you to sign up for Medicare. And important here because you really do have to sign up. Even if you might not be using the coverage in the way you planned, there's a 7-month window, 3 months before the month you were born, 3 months after, and the month of your birth that you have to sign up for Medicare, and you need to get in there and do so. Otherwise, if you're disabled, you are potentially eligible for Medicare, but for most of us, it's that 65th birthday.
What are the different parts of Medicare, actually?
Yeah, so the Part A basic piece is just your hospital insurance coverage. Most people don't pay for this. This is part of the benefits, and it'll cover inpatient hospital stays, skilled nursing facility care, etc. Hospice care, for example, is in there. Then you get into Parts B, C, and D, and that's where you get into more complex stuff. But your Part B is your medical insurance. Part C is your Medicare Advantage plans, and then Part D is an important one when you're retired as well, your prescription drug coverage, and that's where getting a professional involved there to help you consult on what you might need given your specific health needs is important.
The guide is titled Understanding Medicare, Essential Questions Answered, and it discusses these topics as well as a host of other ones. How do you request it? Call 800-393-4001. That phone number again to request the guide is 800-393-4001 for the guide Understanding Medicare, Essential Questions Answered.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Estate and asset protection are the keys to a successful retirement. Cushing & Dolan's new guide is called Back to the Basics. It contains a simple blueprint that will help you create a retirement plan that protects your assets from probate and the nursing home, while also giving you guidance about how to create your will and set up your beneficiaries so that your family's financial security is intact as you get older. If you haven't done your planning yet, or need a second look at your existing plan, call Cushing & Dolan today at 866-848-5699 and ask for their new guide called Back to the Basics. There are many necessary elements that you'll need to include to give you the peace of mind you want as you prepare for your later years. That number again is 866-848-5699. Or you can request the guide online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The calendar is turned and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Mike Armstrong and Marc Fandetti.
Good morning. Happy snowy Thursday here on the Financial Exchange. It's Mike Armstrong, Marc Fandetti, and Tucker Silva with you on a continued busy earnings week. We're going to be talking a little bit about the Trump administration's view on interest rates, the upcoming jobs report. But first things first on those earnings today, we heard from a number of companies, some big, some small, some a little bit nostalgic. We had Peloton reporting earnings, for example, which doesn't move markets at all, but I do kind of miss the early 2020 days of talking about the craziness that was Peloton. Eli Lilly reported, AstraZeneca, Philip Morris, Honeywell, new breakup talks there. And the big one will be Amazon, the $2.5 trillion company. I almost said billion. That would be wrong. $2.5 trillion company will be reporting today after the bell around 5 p.m. Anything catching your eyes in terms of markets this morning, Mark, or any companies you want to jump into? Dow is flat for the day. S&P and NASDAQ are very slightly up at the moment. So it seems to me that no big moves from earnings yet, and some bated breath waiting for tomorrow's jobs report, which will be somewhat complicated for people to digest. So we can jump there.
You didn't mention it. I hope it's okay that I bring up Tesla and how much their sales plummeted is not.
Yeah,
were you gonna go there later?
No, I wasn't. You weren't available on the show, so we should jump in there because that was a report from what was it, Monday or Tuesday of this week? The Tesla report,
the Europe numbers specifically.
Okay, so the European numbers specifically came out
fresher,
more recently.
According to this Financial Times, they're about 5 hours
old. Tesla, when was the earnings report for Tesla, Tucker? Was that this week or last week?
Last week.
Okay, so I remember discussing it at the moment because the market reaction was up on Tesla shares, and the earnings themselves were a dumpster fire. They reported bad sales, bad earnings, bad forecasted sales, but Elon Musk said he's never been more excited, and so people bought the company. What was this announcement particularly?
So compounding that and adding really to the narrative that their core business is arguably sucking wind. Or
don't worry, robots.
Right.
Dancing robots.
Right.
For everyone.
But their sales in Germany and France down 63% in the latter, 50% in the former, 60% in the former as well. Just a fraction of new EVs sold. I mean, a fraction, less than 10%. Where Tesla's a dramatic change from only several quarters ago. If you're a shareholder, of course, you own it possibly for other reasons. You believe the story. Some might say the hype. But if you're focused on its core business, when's the last time they had good news on that front?
Right. Yeah. It's a interesting pivot moment here because, as you say, the sales have been declining for a number of reasons. I mean, in Europe...
dated models.
Dated models. In Europe, they're facing a lot more competition from Chinese manufacturers that we are not facing here. Sure. Domestically, there's the politics situation going on. And so it is a important pivot point. And... I mean, there's been a few moments in Tesla's history that are more important. There was the point in time where they were very close to running out of cash and going out of business a few years ago. So it doesn't quite line up with that importance. But execution on some of their promises is going to become increasingly important if their vehicle sales volumes are actually showing some form of cyclical decline.
How do you price in his political activism? The only conspicuous figure I could think of historically was Henry Ford. He he was famously anti-Semitic. He was a flake. He thought the Revolutionary War was the War of 1812. I mean, he knew actually fit right into today's political scene, but knew very little about our history and didn't give, I think he said something like, I wouldn't give a dime for all of history. I think it's bunk or something like that. Anyway, he's the only figure that sort of comes to mind, an industrialist who was also very, very opinionated. But that was, of course, before social media, and most Americans probably had no idea what Henry Ford thought about the issues.
So it's an interesting...
There's just no parallel, Mike.
It's an interesting and important one to keep an eye on. Important because it is a still massive company that is more valuable than all other automakers combined, and is seeing similar trends that other automakers are, but stock price is not reacting that way. Ford, for example, down 19% last year and reported that they expect their earnings to fall that was Nissan, but falling earnings and rolling out new models. And so it'll be interesting to me to see how they compete with all this. But let's move on to tomorrow. Tomorrow is a jobs report. It's also a revision jobs report. So, Mark, can you kind of bring us up to speed on what exactly happens tomorrow, because they do go back and revise a bunch of previous numbers, and it seems to me that everyone's making a big deal of this, that it's going to confuse everybody. And what I suspect will happen is, one, you shouldn't be confused about this because nobody actually pays attention to the jobs report other than the people on this show and people that watch financial markets really closely. But I suspect the confusion might come from politicians poking the bear here and saying, BLS is messing with their data, and they were making the jobs market look stronger than it was.
Who's going to say now? The people that most reliably voiced the conspiracy theories about data are now in charge of the data.
Right.
By that I mean Trump
and
his administration. Look, these revisions, as you said, Mike, they're routine. They are typically large. They won't impact the monthly number, but they'll impact the cumulative change over the past 12 months to people in the job market and to payrolls. There are people who are knee-deep in the nuances of this, who have opinions on what will move in what direction. The labor force growth will probably go up. Large upward revisions to employment levels is sort of the consensus opinion, and possibly downward revisions to payrolls. Those do come from two different surveys, as you and Chuck talk about a lot. It's ancient history, Mike.
Yeah, I mean, it's 12 months ago. So, again, what will be happening here is you will have a read on the January employment summary that will be coming out tomorrow at 8:30 a.m. Yes, Tucker? Tucker's shaking his head, so he knows. 8:30 a.m. tomorrow.
Eastern.
Alongside that, you get revisions to the last 12 months, and we've seen this before, but very obviously what happens is they go out and survey a whole slew of people and businesses every single month. And as you can imagine, not everybody gets those surveys right back to the Bureau of Labor Statistics immediately. Sometimes it takes a few months. And so they compile all those, and once every, 6 months, do a bunch of revisions to it, I believe. And that leads to a fair bit of confusion on occasion, because all of a sudden you've got these massive changes to, there were actually 900,000 fewer jobs created, or there were upticks in the unemployment rate beyond what we previously saw, but it is a normal course of business. But it is a important jobs report for that reason, because you will not only learn about the month of January, but you will get more accurate information about the course of the last year when it came to the labor market. Anything else to add on tomorrow's jobs report?
Other than what you just hinted at, these are always estimates subject to revision. Some reports are more heavily revised, like GDP and employment, than others like CPI, i.e. inflation, which tends to not change much. But they're always estimates. Mike, like you said, the government surveys a relatively small number of employers or households, and thus there's a lot of uncertainty tied to these numbers, which underscores the point you and Chuck make a lot, which is don't put too much credence in any one report or even any two or three. You need several to get a sense for where things are trending.
Let's take a quick break here. When we come back, commentary out of the Treasury Department when it comes to interest rates. We've got another Federal Reserve meeting coming up in March. Latest comments from Scott Bessent in the Treasury on where they see rates needing to go in 2025. That's next here on the Financial Exchange.
Business and financial news affecting the markets and your wallet. We've got it all straight from Wall Street, right here on the Financial Exchange Radio Network.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We pride ourselves on being able to support veterans in their time of greatest need, ensuring they receive the protections they deserve. For over 100 years, the DAV of Massachusetts has helped thousands of veterans with housing, transportation, and medical assistance, and you can help too. Please visit dav5k.boston and make a donation today. That's dav5k.boston.
Protecting your assets is the key to a sound estate plan. Cushing & Dolan's new guide is called Back to the Basics, and in it, you'll learn how to protect your assets from probate and potentially eliminate your estate taxes. Call 866-848-5699 right now and ask for your free guide today. That's 866-848-5699, or request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Medicare provides health coverage for millions of Americans, but it's a challenging program. Being aware of its many complexities is crucial to your healthcare plans for later life. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and our new guide is called Understanding Medicare, Essential Questions Answered. In it, we'll help you learn about the basics, including enrollment periods, costs, and coverage options, as well as more complicated issues like filing claims and appeals and planning for long-term care. Call us today at 800-393-4001 and request your free guide today. There are many resources available to help you understand your options and rights under Medicare. Ask for our free guide and learn more so that you can make the most informed decisions for your health care. And you can get it by calling 800-393-4001. Again, that number is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The calendar is turned and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine, no more mortgage payment or fees. Call the Timeshare Exit Hotline Frontline Qualification Line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
Wall Street Watch, a full update on the market's performance to date. Weekdays at 10:30, only here on the Financial Exchange Radio Network.
The Financial Exchange is proud of our partnership with the Disabled American Veterans Department of Massachusetts. This year's 5K will be here before you know it, so mark your calendars for Saturday, November 8th. We'll be keeping you updated on registration information in the coming weeks. But in the meantime, if you want to help our great American heroes right now, just visit dav5k.boston, where you can make a donation today and support such programs such as the Veterans Transportation Program, which takes injured vets to their medical appointments. That's dav5k.boston.
Scott Bessent, newly appointed and confirmed Treasury Secretary, is out there talking interest rates today and focusing a little bit on, or trying to divert attention away from the Federal Reserve a little bit, I think, here. And saying, quote, he, referring to Donald Trump, is not calling for the Fed to lower rates. And then goes on to further talk about the Fed and their independence a little bit by saying, quote, I will only talk about what they've done, not what I think they should do from now on. He said that 10-year Treasury yields climbed after the Fed's jumbo rate cuts, referring to the 50 basis point reduction that Jerome Powell and his colleagues enacted in September. So what he's talking about there is, one, I do like to see it because I don't want to see the Treasury Secretary piling on and saying, I'm going to influence what the Fed has to do here. And he's clearly saying,
that's the president's job.
I'm not going to plan to do that. But what he's speaking to in particular, I think, is an important quick lesson about the Federal Reserve, which people have already gotten here, which is that they don't control interest rates that most Americans care about. What I'm referring to is that they don't control long-term rates, and most people don't really care that much about what their money market mutual fund is paying. They care a lot more about what they're going to be paying on a car loan, a student loan, a mortgage loan, things along those lines that are much more tied to the longer rates. And his point that he made in more complex language is the Fed cut rates and mortgage rates went up. So here's the data. On September 17th, which was the day before the Fed began their rate cutting cycle, the Fed funds target rate was at a high range of 5.5%. They don't actually set these rates. They target a range between, at this point, it was 5.25% to 5.5%. They then cut rates by 50 basis points and did 2 more rate cuts at the end of 2024 to bring that target rate down a full percentage point. So it went from 5.5 to 4.5. The 30-year mortgage rate during that same time period from September 17th, on September 17th, it was sitting at 6.11, according to Mortgage News Daily. By December 18th, when the Fed was done with their most recent rate cutting cycle, the 30-year mortgage had gone up to 7.13%. And that is specifically what Bessent is talking about here is, look, we can pressure the Fed all we want, but recent history was you lower rates and long-term rates spike. What would you attribute? I guess first and foremost, just to focus on the education part of this rather than the politics part of this, why would it be that the Fed cuts rates and markets respond by driving long-term rates up higher? What is the expectation there? What's the concern there? Or what causes all of that?
The short answer is anticipation of perhaps higher growth. So when the Fed, which controls the supply of money, as you pointed out, not interest rates, they don't even control very short-term interest rates. They effectively control them because they can dump so much money in the form of reserves into banks. Banks thereby are thereby enabled to make interest rates, make loans at lower interest rates. They effectively control, but they don't in fact control any interest rate. It's an important point that you made. So longer-term rates rising when the Fed stimulates the economy does make sense, and it happens more often than not. As people, that this may not be what's happening in this case. It could be other things like fear of larger budget deficits or fear of a resurgence in inflation. These things can also drive up longer-term rates. But it is not uncommon for the Fed to cut short-term rates and at the same time see long-term rates perk up.
Yeah.
I'll just oversimplify here and say that is an expectation of increased economic activity, though there may be other factors in play.
So other than intentionally causing a recession, which I assume Scott Bessent and Donald Trump don't really want to do, what sort of methodology, what sort of methods or policies has Bessent talked about, or can you imagine up that they might be able to do to influence those longer-term rates? Because if that's their goal, what can you do? Because it's mainly driven, at least in the latter half of last year, by expectations that, hey, this economy isn't as bad as we thought it might get. The warnings about a recession from the Somme rule seem to have dissipated, and so we're in pretty good shape here. How do you go about trying to bring those longer-term rates down through policy?
Curtailing spending and deficits, just like George H.W. Bush and then Bill Clinton did in the early 1990s. Famously, they struck an informal deal with Alan Greenspan at the time. Clinton said, I will get the government's fiscal house in order, and Greenspan, in turn, implicitly, they didn't actually work this out, Greenspan agreed to keep monetary policy accommodative. So you had tight fiscal policy throughout the 1990s, really.
Yeah.
Easy, if you will, or at least not overly stringent monetary policy, and it was the perfect brew. That tight fiscal policy pursued by George H.W., who gets no credit for it, indeed is blamed for the recession wrongly that followed and lost the election in 92 as a consequence. He started it. Clinton continued along the path of fiscal responsibility. This helped bring, virtually everybody agrees, this helped bring long-term interest rates down during the 1990s, Mike. So there's one model, tight fiscal policy, and at the other end, monetary policy working to keep the economy going, even though we're mainly concerned with fiscal policy and its impact on rates in this little discussion.
In this piece, and Scott Bessent in particular, has spoken a lot about energy. Energy supply increasing, gasoline prices down. How might that possibly impact or affect the longer-term end of the yield curve? I have a tough time seeing that.
It was also, Bessent made his bones in the 90s, and he remembers well the mix of responsible fiscal and effective monetary policy that laid the groundwork for the prosperity of the 90s, in addition to some good luck with computers coming into their own and the internet obviously becoming pervasive. Bessent knows that favorable policy mix can influence rates and inflation, as we discussed. He also recalls that energy prices were subdued for much, or falling through much of the 1990s. It's not necessarily the case, though, that just because energy prices remain or increases in energy prices are moderate, that you won't have inflation. Inflation is the persistent kind, the really bad kind. The underlying kind is a function of demand. So if they run big deficits instead of getting a handle on the deficit, and he's famously promised to reduce the deficit, to 3% of GDP. That sounds like a fantasy, but it's what he thinks he can do. If they fail to do that, they will fail to reduce longer-term interest rates.
Yeah, I mean,
they may also fail to get inflation under control completely.
I think that is the key point here, is if you want to get those longer-term rates down, well, there's the accidental way, which would be unexpected recession, bunch of people lose their jobs. That's not what he wants to do. He wants to try and get Doge to work to actually bring down government spending in some meaningful way to bring deficits down. And where I will find it very interesting is eventually Bessent will need to input his opinion on tax policy. And that's where I'm going to be interested to see. He will eventually be asked. It's not being talked about seriously in Congress in terms of what those tax cuts look like. There's been discussion most recently of locking in the Trump tax cuts for just another 5 years in order to get a deal actually done. But if he is very fundamentally serious about deficit control and trying to get those to a 3% target, then I'll be very intrigued to see what he says when asked, okay, there's a bill on the table now to reduce the corporate tax rate even further. It's estimated that it'll blow up deficits to this level. What's your view on this?
As you know, as you guys have talked about a lot, their math doesn't work. They're hoping for, a productivity miracle or something. Their economic goals are frankly preposterous. I get it politically. You have to say Your goals have to be stretch goals.
Sure.
And there's a lot of hyperbole underlying all this, as is characteristic of these folks. But their goals, 3% GDP growth, which is about where we've been the past 2 years, by the way. So it's not like it's impossible. We've been doing it. Maybe that's not a stretch goal. 3% deficits, low inflation, all the rest of it. Some of these things are just plain incompatible, and Bessent knows that.
It's been a week of tariff talk, and Federal Reserve officials are hitting the media circus talking about the risk of tariffs. We'll be covering that next, right after Wall Street Watch.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
The calendar is turned and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about the basics of estate planning. Todd, what happens if you don't have a healthcare proxy in place and your spouse needs nursing home care?
So this is a basic document that we don't talk about as much as we should. It allows you to appoint somebody else to make a medical decision for you. And by the way, it's not just one medical decision. It could be any number of things, from prescription drugs to doing a surgery. And yes, the most important one, which is, hey, if all hope is lost, I don't want to, be on a machine. But that's the basics, and you do need it for that. But the bigger point is, if you enter a nursing home and you don't have one of these, you're not going to be able to admit them. You're going to have to go get a guardianship in order to admit them to the nursing home, because they're not going to allow you to do that. So very important that you have one for that. Now, guardianships are time-consuming and expensive. You got to hire a lawyer. You got to go through a lot of nonsense, right? If you have this basic document, which you should have for anyway, just for your basic purposes, having it not only for those reasons, but to help you get into a nursing home if you need to, is essential.
Learn how you can avoid probate, eliminate estate taxes, keep your money in your family, and protect your assets from the nursing home. Request the brand new guide from Cushing & Dolan. It's called Back to the Basics. 866-848-5699, or you can request it from their website, legalexchangeshow.com. Cushing & Dolan have been helping families like yours for more than 30 years. Call 866-848-5699 or request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Busy day on Wall Street. However, markets are mostly quiet and in mixed territory ahead of tomorrow morning's anticipated jobs report, and also ready for more big tech earnings after today's closing bell, this time from Amazon. At the moment, the Dow is off by 84 points. S&P 500 is up by 10 points, and the NASDAQ is up about 0.25% or 47 points. Russell 2000 edging 4 points higher. 10-year Treasury yield up by 1 basis point at 4.43%, and crude oil is up about 0.75%, trading at $71.55 a barrel. Big news out of Honeywell this morning after the conglomerate announced plans to split into 3 separate companies after facing pressure from activist investor Elliott Management. Furthermore, the company offered a 2025 forecast that was lighter than expected. Honeywell shares off by 5%. Meanwhile, Ford down by 6% after the automaker said deep losses in its electric car business would weigh on profitability this year. The company did, however, beat fourth quarter earnings expectations. Elsewhere, ARM Holdings posted record quarterly sales due to AI chip buying. However, the semiconductor design company's guidance disappointed investors. That stock pulling back by 3%. Qualcomm down by 4% despite the chip maker reporting better than expected quarterly results and forward guidance. Eli Lilly posted mixed fourth quarter results after beating on earnings but missing on revenue, while sales of its weight loss drug Zepbound and diabetes drug Mounjaro soared. They had lower realized prices. That stock up by 2%. Peloton jumping by 14% after the exercise equipment company hiked its full-year earnings guidance. Yum Brands, the parent company to Taco Bell, up by 7% after it beat fourth quarter earnings, and Hershey up by 5% as its quarterly profit and sales also beat expectations. I'm Tucker Silva, and that's Wall Street Watch.
Tucker, you and Chuck always talk about Taco Bell, and can we just all admit that the better brand under the Yum Brands name is undoubtedly KFC? Like, is there any real debate about what's better, KFC or Taco Bell?
I would say that Taco Bell is the edge.
Oh.
In terms of popularity or just taste?
Just taste.
In terms of
popularity is Taco
chicken?
Bell.
Yeah, I'm sure there's more Taco
chicken,
Bell
KFC's
locations.
got the edge, yeah.
Yeah. Thanks, Mark.
Well, buttermilk biscuits, KFC, hands down. Tacos, you want to go to Taco Bell. These are what you're in the mood for. How can you compare the two? These are very different cultures.
Plain and simple. Which one is better?
Which one makes your stomach
KFC
turn over?
is better than Taco Bell.
Well, yeah.
Tucker, can you tell me how many locations each of them have?
Yeah, I'll get on that.
How many U.S. locations Taco Bell? U.S. locations.
Where's this coming from,
KFC.
Mike?
43.
I don't like
Where's
that KFC
this
doesn't
tirade
get
coming from?
KFC doesn't get any of the love when we talk about Yum Brands. It's all Taco Bell, and Taco Bell, quite honestly, kind of sucks.
Hey,
where's this coming from?
You bite your friggin' tongue.
Just disgusting. Just no good.
Did you have a bad experience there recently?
No, it's just, I can get cheap tacos from somewhere that actually knows how to make tacos.
Where? Tell me where. Where can you get cheap tacos? I'm waiting.
There
it ain't
is
Chipotle.
a place called Hungry Coyote in my town that's owned by a local businessman.
If you're talking about
and makes a good taco.
If you're talking
Every
about
town's got a good local taco shop.
But that's not what we're
appetizing
discussing.
name, though. Hey,
Well, you don't eat the
Wanna
coyote.
go to the Rabid Fox? No, not really. I lost my appetite.
By the way,
let's go to the Mangy Beaver.
As of 2025, there are 8,090 Taco Bell locations in the United States, compared to nearly half that of KFC locations. So, but if you want to text in the show and agree with me on this point, that
KFC's been an institution in this country though since the 40s or 50s. They had a bit of a leg up over Taco Bell.
One more reason that they're better than Taco Bell. Yeah, just plenty more history. Better food, and I'll just leave it right there.
Right. Somebody's feeling very MAGA today.
So we are continuing to kind of unwind the discussion of tariff talk that was really the focus of all week, and we'll have some pieces later about these de minimis exceptions, what they mean for folks out there. But there's two pieces from members of the Federal Reserve this week. I don't know that Barron is currently a voting member, but Goolsbee is. And so I want to jump in here and talk about these and what it actually means, less from whether they are right or wrong about tariffs, but I want to take it from the perspective of what does it mean for what the Federal Reserve is likely to do? Because Goolsbee has a piece today, an interview stating that, look, higher tariffs very well could lead to high inflation. Supply side disruptions can have a material impact on aggregate inflation. Barron says, look, economy's in good shape. It's really just government policy that's the wild card. To me, anyway, both of these stories read as we are in charge of monetary policy in this country, and we are not really ready to move things around on interest rates until we have a lot more certainty about what's going to happen with tariffs, tax policy, and things that could be big contributions to inflation. Am I misreading anything there?
No, I think the prevailing view among economists, and they're both accomplished economists in their own right, in addition to having scores of economists advise them. Inflation can be thought of as having two components, an underlying part, a persistent part. That's demand-driven. That's driven ultimately by monetary policy, which influences demand. That's kind of the steady part. It tends to grow 2 to 3% a year. Then there are these so-called shocks. We use the term supply shock a lot. That could mean anything. It doesn't have to mean energy. Supply shocks can come from a positive productivity development. They can come from a food shortage somewhere. The 70s were characterized by supply shocks in food and energy. So you've got these noisy things distorting the trend in inflation. And the Fed's perennial problem, if you like, is inflation going up or down because the trend is changing and that's something we can control? Or is it because there's some unfavorable or favorable change in relative prices? Chicken gets more expensive because we just wiped out a bunch of chickens to stave off avian flu. Those things the Fed maybe can look past because supply shocks tend to be self-correcting or tend to be fleeting, but maybe not if they push up expectations or if they last for a while. This is why, if this sounds a little bit bewildering, that's the normal, you're having the right reaction. This is why a Fed policymaker's job is hard. They're always thinking, should we be reacting to what's happening in the economy? Or is it likely a change in relative prices? Is it a special case that we can look past? And even so, if it's a special case, should we be looking past it? Are people looking past it? Or is it getting embedded in their expectations and likely to push up future inflation through wages and prices? Again, if this sounds a little complicated, Mike, it's because it is. It's because their job is hard.
And there are examples of both successfully waiting out policy and assuming that it will pass and it won't have a long-term impact of inflation, and missteps. I mean, I think
that's right.
The very clear misstep that we talk about over and over again, which was ultimately a read of a policy decision, was, hey, how is all this stimulus going to affect inflation? What are the government's policies on COVID going to do to inflation expectations? And ultimately, I think, kind of misreading the room in terms of what it's going to do to inflation.
Now, and for years to come, economists disagree on whether the inflation of the COVID era and immediate post-COVID era was supply or demand driven. There are ongoing, vigorous, and intense disagreements. If they're all empirical, so the way economists disagree is to say, well, my model suggests slightly more influence from supply side factors than demand, and they, very politely bash each other's heads in using models and evidence. These discussions will continue. Nobody really knows if the Fed could have stopped the COVID era inflation without a huge cost in terms of employment. It upset people a lot, so you could argue that, well, on its face, it was a bad thing. But did the Fed do the right thing by looking past it, by not tightening too much too quickly? It eventually kind of went away on its own without too much pain. That's the supply shock, look past the supply shock, if you like, argument. On the other hand, people got very upset. They tossed a bunch of incumbents out, and now the Fed's faced with a president who might take away their independence. How do you like them apples, Federal Reserve?
So
I don't know the right answer, Mike.
Likewise, they are taking that similar road right now, which is we don't know what policy could look like, and we don't know what its impact will be on inflation. And so we're going to wait and see, seems to be the answer right now.
They couldn't say anything else. What else could they say?
It's exactly
they should
what
probably
you have to say.
Nothing.
It's justified to say it, and the less clarity you get on where tariffs will be and where tax rates will be, the less clarity you're going to get on where interest rates will be next. Let's take a quick break. When we come back, I want to talk a bit about Ford. A massive drop in profit among some other automakers that are experiencing the same thing. We'll be back with some talk about Ford Motor Company next.
Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
Medicare provides health coverage for millions of Americans, but it's a challenging program. Being aware of its many complexities is crucial to your healthcare plans for later life. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and our new guide is called Understanding Medicare: Essential Questions Answered. In it, we'll help you learn about the basics, including enrollment periods, costs, and coverage options, as well as more complicated issues like filing claims and appeals and planning for long-term care. Call us today at 800-393-4001 and request your free guide today. There are many resources available to help you understand your options and rights under Medicare. Ask for our free guide and learn more so that you can make the most informed decisions for your health care. And you can get it by calling 800-393-4001. Again, that number is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The calendar is turned and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
Protecting your assets is the key to a sound estate plan. Cushing & Dolan's new guide is called Back to the Basics, and in it, you'll learn how to protect your assets from probate and potentially eliminate your estate taxes. Call 866-848-5699 right now and ask for your free guide today. That's 866-848-5699, or request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Text us at 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we are covering. This is the Financial Exchange Radio Network.
There's been a mix of kind of two stories when it comes to American automakers over the last year or so. General Motors has generally been seeing a fairly good turnaround. Their stock price over the course of the last 12 months up 26%. Ford, on the other hand, exact opposite direction, down 22% over the course of the last 12 months, and speaks to, I think, just some choices that were made over the last few years when it comes to these two brands. But Ford very much leaned, as far as I can tell, more quickly and heavier into the electric vehicle market with their investments that they made in the electric F-150 as well as the Mustang Mach-E. General Motors has more vehicle models for sale that are electric, but they haven't quite leaned in the same way to it, that from what I can tell, and just seem to be executing a little bit better. They also, from what I can tell, have the second best driving automation tool that's out there with the GM, is it Cruise or Super Cruise?
GM is Cruise, yeah.
They again, not the self-driving cars, but rather the tools that they put into many of their vehicles today. Competes with Tesla's product, if not quite as good as it from what I have read. I don't own a Tesla or a General Motors vehicle. But in any case, the second largest U.S. automaker, Ford, expects no more than $8.5 billion in earnings before interest and taxes this year. That's down from $10.2 billion generated in 2024. They're expecting a 2% decline in pricing industry-wide. And then they have some big expenses from launching a new Lincoln Navigator and Ford Expedition SUVs, so continuing just to lean into their big profit centers of massive SUVs that really drive this company, and appear to be slowing down some of that investment in EV because they are just not seeing the demand that they were looking for. But at some point, Jim Farley starts to face a little bit more pressure here in terms of the turnaround story here. He's been quick to latch on to new trends, but overall missed the ball over the course of the last year at least, and probably some questions being started to be asked about this company and where it goes from here.
How could they not? In the past 12 months, GM's up nearly 30%, Ford's down 20%. That's just cumulative stock price change. In the past 5 years, the difference is a little less stark.
Sure.
But pretty dramatic, up 40%. GM is up roughly 40%. Ford's up a little under 13%.
Yeah, I mean, they've more and more become a very specialty automaker, Ford has, right? If you're General Motors...
They gave up on passenger cars.
They gave up on passenger cars. They said, we're going to lean heavily into two segments, EV and big SUV. And those are kind of contradictory, but I think what people are finding is they don't necessarily want an F-Series electric vehicle. The buyer of an electric vehicle might be okay with a smaller car, and Ford doesn't have one to offer. Yeah. And if you're not in the market for a big, giant truck or SUV, Ford doesn't have much to offer you these days. And so I grow increasingly concerned that they've kind of pigeonholed themselves here into a very specific and high profit margin, but narrow segment of the vehicle market. And if you continue to see interest rates this high and people struggling to make payments, then tough to see people continuing to buy $60,000, $70,000, $80,000 cars in perpetuity.
If you're nearing retirement age and are concerned about how to protect your assets, you need to call Cushing and Dolan, the experts in elder law. Their new guide is called Back to the Basics, and it will help you create a plan that can help you understand issues like avoiding probate, passing your assets along to your family, and potentially eliminating your estate taxes. This free guide has all the information you need to build a safe and secure estate plan that will give you peace of mind as you close in on retirement. Call 866-848-5699 right now and request your free guide today. You can also request a no-obligation consultation to review any current planning you've done. Cushing and Dolan have been helping families like yours for more than 30 years. Let them help you too. Get their new guide called Back to the Basics today by calling 866-848-5699. That's 866-848-5699. Or you can request the guide from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing and Dolan. Cushing and Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
We've got 2 egg stories to cover today. Mark, do you want to start with the heist or the Waffle House?
We did Waffle House yesterday.
You did
but
the
if you want to
Waffle
just
House
mention
yesterday.
it quick for those who weren't listening.
Okay,
Yeah.
Sorry, so I missed it. But
Thanks for listening.
Waffle House, famous for their hurricane detection index. If you haven't heard of the Waffle House Index, you just take a look at how many locations are closed, and it's a really good barometer of what sort of natural disasters are going on across the country.
A correlation between mortality and
eating
their
at
sales.
Waffle House? No.
Oh, okay.
So the Waffle House Index gives you a good idea of how bad a natural disaster is because they never close unless they really have to. But Waffle House imposing a 50-cent egg surcharge on any egg dishes on their menu was apparently covered yesterday. Sorry, Tucker.
It's okay.
But the real story here is the biggest heist of 2025, where 100,000 eggs were stolen in Pennsylvania amid the massive shortage that we're talking about. The theft of eggs, which the authorities said were worth only $40,000. Yeah, I guess that plays up. $40,000 comes as grocery store shoppers across the country are facing empty shelves. And my question, actually, I have 2 questions. One, how do you move stolen eggs? You know, if I walk into downtown Pittsburgh, is somebody just going to be like selling eggs out of a sketchy alley somewhere? Because that is
out of the back of your Camry, you know,
amazingly entertaining to me. I hope it's just like New York City when, you know, the guy with the big trench coat comes up to you, opens it up, and he's got all sorts of watches and other jewelry that he can sell you, and it's just pockets full of eggs. But that's dangerous because they crack pretty easily, so I don't know how that's going to work.
No, don't touch me.
The second piece is, can you imagine being the mob boss who has fallen so far from his forefathers, you know, decades ago, that you have fallen into egg heists? Like, how embarrassing is that for you if you're a Pennsylvania mob boss who had to jump into stealing eggs as opposed to, like, precious metals, bank robberies, or art? It's just hilarious to me. But in any case, 100,000 eggs stolen from Pennsylvania.
Legendary, right up there with the Lufthansa heist, the egg heist.
Yeah.
It'll be one of the all-time legendary heists.
Quick break. We'll be right back with more on the Financial Exchange.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine, no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
This is the Money Matters Radio Network. WBNW 1120 AM and W275 CM FM. Concord, Boston. The Money Matters Radio Network.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, Desi is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
The calendar is turned and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
Protecting your assets is the key to a sound estate plan. Cushing & Dolan's new guide is called Back to the Basics, and in it, you'll learn how to protect your assets from probate and potentially eliminate your estate taxes. Call 866-848-5699 right now and ask for your free guide today. That's 866-848-5699, or request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled Understanding Medicare, Essential Questions Answered. Mike, first one that most people have: how do you actually become eligible for Medicare?
Vast majority of us, you turn 65, and there's a special window that becomes open to you when you are turning 65 for you to sign up for Medicare. And important here because you really do have to sign up. Even if you might not be using the coverage in the way you planned, there's a 7-month window, 3 months before the month you were born, 3 months after, and the month of your birth, that you have to sign up for Medicare, and you need to get in there and do so. Otherwise, if you're disabled, you are potentially eligible for Medicare, but for most of us, it's that 65th birthday.
What are the different parts of Medicare, actually?
Yeah, so the Part A basic piece is just your hospital insurance coverage. Most people don't pay for this. This is part of the benefits, and it'll cover inpatient hospital stays, skilled nursing facility care, etc. Hospice care, for example, is in there. Then you get into Parts B, C, and D, and that's where you get into more complex stuff. But your Part B is your medical insurance. Part C is your Medicare Advantage plans, and then Part D is an important one when you're retired as well, your prescription drug coverage, and that's where getting a professional involved there to help you consult on what you might need given your specific health needs is important.
The guide is titled Understanding Medicare, Essential Questions Answered, and it discusses these topics as well as a host of other ones. How do you request it? Call 800-393-4001. That phone number again to request the guide is 800-393-4001 for the guide Understanding Medicare, Essential Questions Answered.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Mike Armstrong and Marc Fandetti.
Good morning. Welcome back to the Financial Exchange. Our top story today continues to be earnings that have been reporting all throughout the week. Yesterday, after the bell, we heard from Novo Nordisk, Toyota, Alibaba, Walt Disney Company. Yeah, that was yesterday as well. Qualcomm, ARM Holdings. This morning, before the bell, we heard from Eli Lilly, AstraZeneca, Philip Morris International, Honeywell, Bristol Myers Squibb, ConocoPhillips, among many others. And then today, after the bell, we will hear from Amazon on their earnings, the $2.5 trillion behemoth out there. Tomorrow, we'll see a jobs report released. It'll be a unique one because every once in a while, they go back and do revisions for the previous several months. And so we will not only get a read on January's labor market, but also get a more accurate read on what the state of the jobs market was over the course of the last year. This morning, markets mixed. Dow off 98 points, or 1/5%. The S&P up about 0.1%, and the NASDAQ doing about the same. Not much in the way of a move on interest rates, up on the 10-year to 4.436%. Price of oil moving up slightly, only to $71.36. That brings us to the national average gas price, which, as of today, we are sitting at $3.14. I'll say that I was up in New Hampshire yesterday, so I got to fill up my tiny gas tank at a nice price of below $2.70 a gallon. So that was nice feeling, but nonetheless, not a huge volatile day on markets so far today, in spite of what was a volatile week for news anyway. In terms of the market move, relatively muted on Monday, but we had the announcement of new tariffs going into place over the weekend. The assumption that they would be in place on Monday morning, followed by the very rapid suspension of tariffs on Mexico and Canada, imposition of tariffs in China, and yet markets haven't moved all that much, and brings us to this piece from the Financial Times. Yes, the Financial Times. How to trade the trade war. And I think my answer is, unless you are in Donald Trump's inner circle and know what the trade war is going to look like, then don't.
Or even if you are. I don't know if any of them know.
Yeah, I mean...
I don't know if he knows.
Right.
And he would probably concede that.
Yeah. Hey, it is really, really difficult to know all of this stuff. How to trade the trade war? I mean, look, I just don't think I would treat it any differently than any other unknown risk that we have talked about in terms of geopolitics over the course of the last several decades. You don't know how it will play out. You can't perhaps perceive how it will affect markets. You can have some, pre-planned actions to take once you know certain things, but until that's clear, and even once it is clear, you just don't know if it could be suspended or changed at the 11th hour. And so I think it's very difficult for anyone to say that they are going to be able to successfully trade the trade war risk that's out there right now.
No, any kind of volatility. We talk about this a lot internally. When swings amplify, when turmoil picks up, that's generally bad for returns. The best return years are the lowest volatility. Your volatility is just a fancy way of describing the spread around the average. The bigger the spread, the more something's swinging. Maybe you've heard the term standard deviation. That's how people in finance measure risk. When they say volatility, they mean the same thing as standard deviation or risk. You can use all those things synonymously. And fact is, volatility went up a bit. I'm looking at rolling 3 and 5 day risk, Mike, based on our off-air conversation, and went up a bit at the end of last week, but has since moderated and doesn't. If you looked at a chart of volatility, you couldn't pick out the most recent episode as coinciding with anything special having happened. But generally speaking, volatility is bad, and if we're in for a 4-year roller coaster ride of one day it's a trade war, the next day we're taking over Gaza to build hotels, and there's acrimony over that internationally and domestically, and the next day we're going to be invading Panama for the second time in the last 40 years. This is probably not good for certainty, if you like, and probably a drag on equity returns. They may still be high, but this doesn't help them.
So when we speak about volatility, it's not necessarily just to the downside, right? I mean, when you speak about volatility...
No, it's literally the spread.
The spread. It's how big the moves are on a you-choose basis, day-to-day basis, week-to-week, month-to-month, quarter-to-quarter, year-to-year, whatever you want to call it. But it's the moves up and down.
That's right.
Generally speaking, well, I think most people recognize that volatility more than often than not means bad things, but statistically, we can actually prove that out too, right? Volatile markets are not usually,
they tend to be
or
lower
on
return
average,
markets.
tend to be worse markets.
Said differently, they're inversely, i.e., moving the opposite direction, correlated. So the higher the volatility, the lower the returns over 30 days, 12 months, virtually whatever period you want to look at. It sounds like volatility should be kind of neutral. Well, I like the upside volatility. The fact is, when those swings get more intense, it coincides with big down turns as well as potentially sizable upswings, and on average, it's bad. It's bad in the sense that you get lower than average returns. You want calm markets.
And is it fair to say that 2023 and 2024 were not volatile?
They were low
markets?
volatility. No matter how you look at it, that standard deviation or risk that I mentioned, number of days when returns were, sometimes I show this internally, number of days when returns were lower than negative 1%, lower than negative 2%. By any measure, markets were unusually placid in those years and in other years like 2019, which were high return years.
Those points confuse people sometimes because people fail to accurately look at percentages. And we also have a bias towards remembering the big swings. There's a few things that play into this, but I think it's important to make that point that 2023 and 2024 were actually historically low volatility years, in spite of the fact that those days that you saw, and I think it largely has to do with where the Dow is today, because people have that set in their mind as, oh my God, the Dow is swinging 80 points. That must mean that markets are going through, well, no, 80 points these days is 1/5 of 1%, and people fail to make that recognition. But I think it is an important point that, yeah, stocks did really well over the course of the last 2 years, and were historically not volatile during those 2 years. Self-interested article of the week, perhaps, here from CNBC, an interview with Lisa Chalet, who I didn't know her, but she's the chief investment officer at Morgan Stanley Wealth Management, and she's arguing that you need to rethink your set it and forget it strategy in 2025. There's not many people that I can think of who would benefit from more people saying, hey, I need to be nervous about my portfolio and do away with a set it and forget it strategy and instead go hire a professional manager. The chief investment officer of one of the largest wealth management firms in the world would seemingly benefit from that. I'm usually doubtful of anyone that is telling me that I need to completely reverse course on my investment strategy of set it and forget it and employ a new strategy because of some new risk out there, Mark. I don't know what your takeaway is, but my takeaway would be we don't know that 2025 is going to be more volatile, and we also don't know that any investment managers are going to be better at dealing with that volatility than just keeping the way things were before. So my words of warning here are, don't let scary news articles sway your strategy. Always, you should be taking a look at your strategy and seeing if it lines up with your longer-term goals. But just because this president's talking more about tariffs and more about big geopolitical policy shifts doesn't mean that it necessitates a massive undertaking and shift of your total investment strategy.
Look, the defining feature of U.S. economic growth and as a result stock market growth is the steady upward climb over, say, the last century, for a period for which we have really good data. And by that I mean a reliably positive rate compounded. You see this in the GDP series that we talk about a lot. It's just a nice upward sloping line. Recessions, if you pull back from the page a foot, you can't even pick them out of the series. Similarly, stocks, most of the declines are fleeting. Some of them are sharp and uncomfortable, but most are fleeting. The point I'm trying to make here is policies were very different at different points in time along those series, but those differences had very little persistent or permanent, if you like, impact. It could be different this time. This administration could break something. I tend to think that they won't, though. So look past it. And as you always counsel your clients, Mike, let your long-term goals and tolerance for risk decide your investment strategy, not what you think a particular political party in power might imply for the very short term. In the long term, these things are really just blips.
Let's take a quick break. When we come back, Corey Adams joining us from Robert Half, their newest job survey when it comes to job switching. That's next here on the Financial Exchange.
Miss any of the show? The Financial Exchange Show podcast is available on Apple, Spotify, and iHeartRadio. Hit the subscribe button and leave us a 5-star review. This is the Financial Exchange Radio Network. Estate and asset protection are the keys to a successful retirement. Cushing & Dolan's new guide is called Back to the Basics. It contains a simple blueprint that will help you create a retirement plan that protects your assets from probate and the nursing home, while also giving you guidance about how to create your will and set up your beneficiaries so that your family's financial security is intact as you get older. If you haven't done your planning yet, or need a second look at your existing plan, call Cushing & Dolan today at 866-848-5699 and ask for their new guide called Back to the Basics. There are many necessary elements that you'll need to include to give you the peace of mind you want as you prepare for your later years. That number again is 866-848-5699. Or you can request the guide online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing and Dolan. Cushing and Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The calendar is turned and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Medicare provides health coverage for millions of Americans, but it's a challenging program. Being aware of its many complexities is crucial to your healthcare plans for later life. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and our new guide is called Understanding Medicare: Essential Questions Answered. In it, we'll help you learn about the basics, including enrollment periods, costs, and coverage options, as well as more complicated issues like filing claims and appeals and planning for long-term care. Call us today at 800-393-4001 and request your free guide today. There are many resources available to help you understand your options and rights under Medicare. Ask for our free guide and learn more so that you can make the most informed decisions for your health care. And you can get it by calling 800-393-4001. Again, that number is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John, and if you act now, you can take advantage of a special promotion to St. Croix. Experience a vibe like no other and get a $250 per person airline credit when you book a minimum 5-night stay at participating hotels. Go to visitusvi.com and use code VIBE2025 to reserve your trip today. Take your next vacation to St. Croix in America's Caribbean paradise, the United States Virgin Islands. Go to visitusvi.com and use code VIBE2025 to book your trip. That's visitusvi.com and code VIBE2025.
Joining us now is Corey Adams from Robert Half, talking to us about the latest survey of findings they did on more than 2,000 workers. Corey, thanks for joining us.
Good morning, Mike. Thanks for having me.
Before we get started on your findings, anything to take away from Tuesday's JOLTS report or anything in particular you're looking for out of tomorrow's monthly jobs report release?
Sure. So I think let's start with this as it relates to the JOLTS report. So hiring has stabilized. It hasn't stalled. So the labor market continues to hold steady even as these job openings are decreasing. So to your point, the JOLTS report came out yesterday, 7.6 million job openings, quite a bit of a drop from the 8.1 that we saw in the previous report. So this is indicating a gradual slowdown rather than a sharp downturn, which obviously nobody wants.
Yep.
I think it's important to note as well that layoff levels remain relatively unchanged. So for me, it somewhat reinforces that employer confidence is there in terms of retaining talent.
Can you share the trends you're seeing from your own surveys that are, really affecting job seekers in 2025? I've spoken to a few soon-to-be college grads, for example, who are finding it to be a bit more of a struggle than previous years. What are you seeing in your survey data?
Sure. So from the Robert Half Job Optimism research, it actually highlights 4 key trends for 2025. So the first one is career satisfaction continues. So 81% of workers stated that they're generally happy in their current role, which is great to hear. Now, this career satisfaction trend leads to the second trend, which is leading to fewer workers actually planning to do a job search. So only 29% of workers plan to look for or plan to execute a job hunt early in 2025. And that's important to note. That's down from 35% from the same time we asked that question in July of 2024. The third trend is that Gen Z and millennials are most likely to actually make a career move in the first half of this year. And the top motivator for younger professionals is an increase in their salary. And then the fourth trend is upskilling, which we talked about quite a bit. But upskilling is boosting worker confidence, with 77% of workers citing that they've learned a new skill in the last year.
Speaking of new skills that everybody wants to talk about, AI, what role is artificial intelligence now playing in the job search for those who have been out of a job search for a while?
So AI can help streamline the hiring process by matching job seekers with roles based on skills and experience, making job searches faster and, in theory, should be more efficient. However, an over-reliance on AI can actually lead to missed opportunities if workers are not customizing their job search to each unique opportunity. And then likewise, listen, employers also have to balance AI tools with human insight to ensure a fair and holistic hiring process.
Give me a sense, any tips for those looking for, a career change or maybe entering the labor market come May or June of this year, or looking to make a career change now?
Yeah, I do. So first, most important, be clear about what you want in your next role, whether it be flexibility, career growth, a better work culture, more money, whatever it is, make sure you know what it is and make sure you're clear about it. Next, I would say upskill and reskill to align with emerging trends and roles. This will set you apart from other applicants. And we know it's going to be a competitive job market. So you're going to want to do that this year. And then finally, and we talk about this one a ton, and it's so important, but tailor your resume and LinkedIn profile to highlight your accomplishments and transferable skills. So that way you're making it easy for employers to see your value as a potential employee at some point in the future.
Is it a good time for an employer to look for new workers? I know, a lot of complaint about a stagnant job market. Is it therefore, easy for employers to find that new highly talented individual, or are they just not moving?
It depends. I think some markets you're seeing more movement than others. We know that some of the key factors for why people are so happy is they've got competitive salaries with regular merit increases. People are saying that they have fair workloads and they're pretty clear job expectations, so they know what they're supposed to do, when they're supposed to do it. And people feel like, and this is coming around a lot, they have a really positive work culture. So it's tough. Workers are happy, but, in a separate survey that we've completed before, 63% of employers said that they do, in fact, plan to add new roles in the first half of 2025. So you have less workers looking to make a move. So organizations are really going to have to be strategic when it comes to attracting talent and filling mission critical roles right now.
Corey Adams from Robert Half joining us to talk about their most recent survey of 2,000 U.S. workers on job satisfaction and looking for that next role. Corey, always appreciate you joining us. We'll talk to you again soon.
My pleasure. Talk soon.
All right, time for trivia here on the Financial Exchange, and today is Ronald Reagan's birthday. During Reagan's presidency, he signed a bill into law establishing the Dr. Martin Luther King Jr. holiday. Trivia question today. What year did President Reagan establish Martin Luther King Day as a federal holiday? Once again, what year did President Reagan establish Martin Luther King Day as a federal holiday? Be the fourth person today to text us at 617-362-1385 with the correct answer, and you win a Financial Exchange Show t-shirt. Once again, the fourth correct response to text us at 617-362-1385 will be our winner and get that Financial Exchange Show t-shirt. See complete contest rules at financialexchangeshow.com.
There is a new executive order from the Trump administration that came out, I believe it was on Monday, specifically regarding something called de minimis when it comes to packages coming into the United States, specifically eliminating an exception where customs was not required to inspect international shipments with a value of less than $800. This allowed companies like Temu and Shen, big Chinese retailers, to import a whole bunch of stuff without tariffs into the United States. That is apparently creating a fair bit of confusion out there, how this changes things. Customs and Border Protection needing to inspect and collect tariffs on many more packages. The U.S. Postal Service even temporarily stopped accepting new packages from China and Hong Kong before allowing them again. But this is one of those loopholes that kind of had a dump truck driven through it. The Chinese imports represented 75% of the de minimis products that are found online, and so this was being taken advantage of, I think, is a smart change, but how it gets implemented is going to be a really interesting question. I think most certainly, though, some of those Chinese retailers are going to have a tough go with it. Quick break. We'll have the trivia winner when we come back, and then I'm not sure yet. I'll let you know.
Good tease.
Thanks.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
Medicare provides health coverage for millions of Americans, but it's a challenging program. Being aware of its many complexities is crucial to your health care plans for later life. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and our new guide is called Understanding Medicare, Essential Questions Answered. In it, we'll help you learn about the basics, including enrollment periods, costs, and coverage options, as well as more complicated issues like filing claims and appeals and planning for long-term care. Call us today at 800-393-4001 and request your free guide today. There are many resources available to help you understand your options and rights under Medicare. Ask for our free guide and learn more so that you can make the most informed decisions for your health care. And you can get it by calling 800-393-4001. Again, that number is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The calendar is turned, and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about the basics of estate planning. Todd, Massachusetts recently raised their estate tax exemption to $2 million. Do people still have to plan?
Yes, it's a simple answer is yes, but let's think about it from a back to the basics standpoint, right? Some people think they don't even need a will, or if they have a will, that's all they need. First, I want you to know that a will is a won't. It won't avoid probate. It won't help you reduce estate taxes, which we're talking about. It won't help you protect assets from the nursing home, so it won't do a lot. So a will is really a won't, so please don't stop with a will. The reason you need to do a trust is this new exemption that you speak of went from $1 million to $2 million. So now with a trust, you are able to double that exemption by being a married couple and having a trust in place. You can shelter $2 million on the first death and $2 million on the second death to shelter $4 million. But you need a trust to do it. And while the exemption went up, which is good news, the cost of not planning just doubled. So very important to get your trusts in place.
Learn how you can avoid probate, eliminate estate taxes, keep your money in your family, and protect your assets from the nursing home. Request this brand new guide from Cushing & Dolan. It's called Back to the Basics. Call 866-848-5699 or visit LegalExchangeShow.com to request it. Cushing & Dolan have been helping families like yours for more than 30 years. Once again, the phone number 866-848-5699 or request it from their website, LegalExchangeShow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
Trivia question today was, what year did President Reagan establish Martin Luther King Day as a federal holiday? That'll be 1983. Jack from Brockton, Mass. is our winner today, taking home a Financial Exchange Show t-shirt. Congrats to Jack. And we play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
For the first time ever since the inception of the 401k 50 years ago, half of private sector workers are now saving in 401ks. About 70% of private sector employees in the United States now have access to a 401k style retirement plan. So I suppose that might include something like a simple IRA or other types of plans that, like they say, are similar to a 401k. And then in the public sector, there are all sorts of different types of retirement savings plans. But Mark, you spent some time in the 401k space. What do you see, having come from there and obviously having participated in 401ks, biggest benefits, biggest drawbacks of those types of plans that you see out there commonly?
Well, undeniably, they came about at the right time. They coincided. The first 401k came about in roughly 1981. Somebody discovered that the law we know as ERISA allowed for this kind of. It started as a loophole, is what I'm trying to say.
Yep.
The Congress didn't say we're creating the 401k.
No.
Have at it. Somebody discovered that you could put away money on a tax-deferred basis, providing you met certain conditions. It wasn't too long after that, mid-1980s, when Fidelity and others jumped in, started telling companies, hey, we'll do yours for free. Now, of course, they were collecting money on the investments.
Sure.
That approach has since been made illegal. They weren't doing anything wrong. It was a smart business model. But I guess my larger point is 401k came along at exactly the right time.
Right time, why? Because
in terms of stock market growth,
Yeah.
the growth in the economic recovery and simultaneous recovery in equity markets.
I would say it also
virtually uninterrupted for 20 years, starting in 1982. Sorry, go ahead.
I would say it also came at a time of cyclical decline in pension availability, so that was important.
Decline in
as well.
manufacturing jobs and other public sector jobs that historically offered pensions. So a number of factors supported the growth of the 401k. It was the right time legally because of this. Because of the law we know as ERISA, and maybe more importantly, stock markets were about to embark on an unprecedented run lasting nearly 20 years, featuring double-digit returns on average, virtually uninterruptedly. So what was your original question before I got into my 401k stump speech?
What would you see today if there are any of downsides to 401ks or confusion by participants? Like, what do we see as some of the drawbacks there as opposed to other vehicles for savings? Because honestly, it's kind of tough to compete with the fact that you can contribute more to 401k than any other type of tax specialized vehicle. And oftentimes your employer matches to it. So it's a pretty compelling case for most people.
They're great accumulation vehicles. You defer a portion of your salary. Your employer may match part of that. Typically they do. They may make an additional profit-sharing contribution periodically. They don't have to, but they could if their profits allow for it. So a great accumulation vehicle. The investments are generally inexpensive now. So-called target date and other balance type products basically manage your money for you. They even get less risky as you get older. So there are lots of benefits for accumulators, for those in the savings stage. The problem is that they're not great decumulation or distribution vehicles. Now, rules differ by plan, but for the most part, Mike, they're pretty inflexible. Unlike with, say, your IRA, where you can call your provider, get a withdrawal at any time, and tell them where to take it from. For example, don't take it from my stock fund. That's down a little. Or that's long-term. Take it from a cash vehicle or a money market fund. IRAs give you that type of withdrawal flexibility. 401ks typically don't. So they're a bit rigid for people in their distribution, if you like, phase of life.
We know that most of you listening have contributed to a 401k in the past or are currently doing so. And I've also heard a lot of confusion about them. How do I go about investing, selecting my fund lineup? What should I be doing? Traditional versus this Roth thing. And then also just sometimes, in terms of my own family too, some general mistrust of anything that's provided to me by my employer, which is oftentimes misplaced based on how 401ks are set up. But I would tell you that if you're facing these types of questions, maybe it's mistrusting your employer and what they may or may not do with that 401k bucket. Maybe it is where you should be contributing to, or does it still make sense to go above and beyond the match in your specific situation? Call the experts at Armstrong Advisory Group. We work with our clients every day on this type of thing. Tax-sensitive investing. Where should the next dollar go? Am I better off in my 401 versus, a non-taxable account or maybe an HSA? What's going to actually benefit me best long-term? Our phone number is 800-393-4001. We offer free consultations in person throughout New England. We do it via Zoom and phone call as well. But the first step is to give us a ring and talk to one of our professionals here at Armstrong Advisory Group. The number, once again, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Speaking of that distribution phase of life, Mark, some 40,000 federal workers have apparently taken the buyout offer so far from the Trump administration to, I believe the details are working through, it's unclear, either mid or end of February, getting paid through the end of September. 40,000 workers sounds like a lot, but it is actually well below the target range for what they had been looking for, which is 5 to 10% of the federal workforce, or 100 to 200,000 federal employees. You had also brought up something to me off air, which is, you mentioned approximately 65,000 government workers
according
retire
to Bloomberg
every
in
year.
Today's article.
So that is, frankly, a little bit discouraging if the numbers end up here at 40,000 for Doge's work, because I can tell you only of one example I know of a federal worker taking the package, and it was somebody who said, I'm planning to retire in like 3 months. I will absolutely take a package that pays me through September just to retire right now. And so we will see what these numbers look like. The deadline is apparently today. There are still a lot of questions out there about, does this need funding for Congress to pay workers for not working through September? And unions have come out and said, hey, this offer isn't necessarily guaranteed, so buyer beware. But I won't be surprised if this actually ends up lining up pretty closely with the number of average retirees that we see every year, because there has just been a lot of stagnation in the labor market, and people are not necessarily trusting, I think, that they can jump and go find that next job.
Yeah, this is going to pull forward, as evidenced by your example, people who had planned on retiring at the end of the year anyway. So a certain number of these will not be excess retirements. They'll be retirements that were planned,
but what a deal!
Not announced.
What a deal if you can get it. I can get paid by the federal government to not work for 7.
Is
how
this
many
a deal
months
for
is
taxpayers,
that?
Mike?
7 months?
I don't know. Presumably they'll give us some sort of accounting on this at some point.
Yeah,
you do have to account for those who would have retired anyway.
Yeah, I would love to see the average age of the person that takes this buyout. If it's over 60, then this was a failure.
Yeah, well, it's probably not going to live up to expectations either way. The whole federal workforce, all in, costs taxpayers $300 billion a year. That may sound like a lot, but the federal budget is nearly $6 trillion, or 1,000 times that, 100 times that number.
Yeah.
Am I doing the math right? One is a three. Go ahead, sorry.
Nonetheless, I'll be most interested in, okay, when the final numbers come out, how did you do against the target of 100 to 200,000 workers? Were we well below that, and was it mainly people that were retiring anyway? I agree with you. This is not going to fix our deficit problem, even if the full 200,000 people take the buyout offer. Let's take a quick break. When we come
20 times, excuse me.
When we come back, Stack Roulette next on the Financial Exchange.
This is your home for the most comprehensive coverage of the economy and the trends on Wall Street. This is the Financial Exchange Radio Network. The calendar is turned and the cold is here to stay. So now's the perfect time to plan that getaway to the U.S. Virgin Islands. Act now and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Protecting your assets is the key to a sound estate plan. Cushing & Dolan's new guide is called Back to the Basics, and in it, you'll learn how to protect your assets from probate and potentially eliminate your estate taxes. Call 866-848-5699 right now and ask for your free guide today. That's 866-848-5699, or request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Medicare provides health coverage for millions of Americans, but it's a challenging program. Being aware of its many complexities is crucial to your health care plans for later life. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and our new guide is called Understanding Medicare, Essential Questions Answered. In it, we'll help you learn about the basics, including enrollment periods, costs, and coverage options, as well as more complicated issues like filing claims and appeals and planning for long-term care. Call us today at 800-393-4001 and request your free guide today. There are many many resources available to help you understand your options and rights under Medicare. Ask for our free guide and learn more so that you can make the most informed decisions for your health care. And you can get it by calling 800-393-4001. Again, that number is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
Time for a bit of stack roulette here on the Financial Exchange. I will kick things off since Mark is very clearly unprepared here. Nissan looking for a new partner on as Honda deal. It looks like it's set to collapse. Before we get to a potential deal, I just want to talk about how much of a disaster Nissan looks like right now. The automaker will be reporting third quarter earnings next week, but they already pre-announced a 94% drop in net income for the first half and said that it will need to dismiss some 9,000 workers, cut a fifth of its manufacturing capacity. This is a company in massive turmoil. Like we teased Ford for a little bit here, but Nissan, I mean, a 94% drop in net income speaks to a company in a bit of crisis right now. And I really can't. They did have some limited success over the course of the last decade. I know for a number of years that Nissan, is it the Nissan Rogue, the small SUV? Is that what I'm thinking of? That one was pretty popular. You saw that all over. No, that's not the one I was thinking about. What's the even smaller SUV?
The
Nissan,
Leaf? That's the electric.
No, small SUV.
Begins with a J. Juke?
Kicks?
Maybe they don't even make the Juke anymore. I don't know.
Yeah.
Not the
I
Murano.
don't know that
they
don't make it anymore, maybe, but they have had limited success in the small SUV business for a little while. But this is a company that has a really complicated relationship with Renault that they were trying to unwind over the last several years, and a 94% drop in, like, who's going to want to buy this company? The deal with Honda apparently didn't work. Again, still reportedly being talked about, so it's not completely dead yet, but the deal looks like it's pretty much dead in the water, and Nissan was not terribly interested in becoming a subsidiary of Honda. They wanted some form of partnership, and that doesn't look likely to happen here.
They have 6 different SUVs. Kicks is the smallest, followed by Rogue, Pathfinder, Aria, Murano, and Armada. 6 SUVs.
Maybe it was the Rogue that I was thinking of. I don't know. It always looked like a little bug to me in some way, shape, or form. But yeah, nonetheless, Nissan fallen on some hard times here and struggling to really find their way in the market. What do you have for us for Stack Roulette, Mark?
Mike, here we go again. Lawmakers pushing to ban DeepSeek's app from government devices for starters.
Can we just say that if you work for the federal government, you should not have an application on your phone from China? Like, is that really too difficult for us to just all agree upon?
Or maybe an app with ties to any foreign government, adversarial.
Yeah, I mean, it's not that difficult.
Adversarial or not.
Yeah.
I mean, you restrict what I can put, reasonably so, what we can put on our cell phones if we also use them to access work.
Right.
Email.
Yeah.
So this is something that's routine, is my point, in the private sector world, particularly those of us who work in financial services and probably every industry.
Now, I guess
we're used to it.
It starts to get complicated if you say any foreign developed app, because now I think about it. Don't new cars require you to have an app to operate them? Like, do I need to have a Toyota app if I'm buying a 2025 Toyota? I think I kind of do. So, I don't think you need to go that far. But, generally speaking, I really don't want any Chinese-made app on any Americans' phones, but certainly if you work in government, a reasonable expectation should be that if you have an app that is developed by a company in China, North Korea, Iran, Russia, it probably shouldn't exist on your phone as a government worker. That seems like a very low bar to me.
Yeah, or you keep your personal cell phone stays in your car.
Yeah.
You can't download any apps. Maybe you don't discriminate in favor of or against those with ties to a particular country or government, because that does get a little bit unwieldy. Who's our enemy this week and so forth. But this is not hard in the private sector.
Right.
Employers restrict what you can do even on your personal devices if you choose to put work-related apps on them all the time.
Right. DeepSeek remains, by the way, the most downloaded app in both the Apple and Google app stores right now. So it is still
what are people
surging
doing
in
with it? Are they just querying it to try to stump it? Why would you put this on your cell phone?
I don't have a great answer. I think probably you are testing it out and saying, hey, is it really that much better than, say, ChatGPT's free version, which it might or might not be. I don't know. I don't know why people are
procurement
so
people who may be buying software that is AI powered at some point. I get it, but I just don't understand the practical use at this point for most.
Chili's is popular again?
Apparently, yeah. Out of all the fast casual restaurants, they are.
Do we believe the Wall Street Journal's definition of what's popular?
I've seen
what's
multiple reports on this. This isn't just like a single outlet thing. Like I've seen.
How are they going about making Chili's popular again? Brinker International owns the company Chili's and have been revamping the chain's menu, remodeling their restaurants, which is probably all you need to do. I think where they are having a moment here is, we've talked about this at length before, the differential now between fast food and what do we call this? Like, it's not fast casual. It's sit down, but the price differential now between getting a burger at like a Chili's or TGI Fridays compared to going to In-N-Out and getting a full, burger meal there, it's really narrowed over the last few years, especially if you live in our most populated state in the country, California, where they've got these new fast food minimum wage laws. The price differential is really narrow now, from what I understand. And so that might be all it is seizing on that moment to say, okay, we've got the pricing down, so if we can just make this a popular area to come grab a drink and buy some food, maybe that's all they really need to do.
Yeah, I'm just looking at a CNBC item from back in September, and they noted that they have had a viral social media presence and a push toward value-oriented advertising, helping propel sales growth.
Yeah, I think that might work. I'm interested in the Chili's
same-store sales
commercial.
jumped 15%.
Yeah, again,
their food is really good. When did they become? I missed it. When did they become unpopular?
I feel like all these fast casual brands, not fast casual. What are we describing the segment?
I don't know. Like just
a sit-down chain.
You're going to get the same thing in every location.
Chili's,
possible.
TGI Fridays, Olive Garden, I think all got kind of that reputation as just the tired old sit-down restaurant brand that your grandparents brought you to. Ground Round struggled. Many of these just struggled to, I think, draw new attraction, and all the eyes were set on Shake Shack and In-N-Out Burger, and these places struggled, and I think they're having a bit of a resurgence is the only real story
I
here.
guess their triple dipper is a staple on TikTok, and their margaritas are too. I don't know, in terms of value and bang for your buck. I don't know. It's big with the youngsters.
We should probably broadcast from a Chili's sometime soon, Tucker. Can you make that happen?
I can look into it.
Okay. Get some baby back ribs. Dow Jones Industrial Average now off 125 points, a little bit more than 0.25%. The S&P up 0.5%, still up 12 points now. The NASDAQ up 27 points, a little bit more than 0.1%. And the Russell 2000, those smaller size companies, off very slightly. We will have the behemoth Amazon reporting this evening at 5 p.m., so keep an eye on markets, followed by the jobs report tomorrow. So tune in, stay warm, get those driveways shoveled, and we will talk to you tomorrow, folks.